Okay, guys, here we are. This is our second Friday real estate conversation update. So we've gotten a few questions over the week, and now we're ready to answer them. So if you have any other questions that you want to get answered during the next like 10 or 15 minutes, I know we're starting a little bit late. I was trying to get all of the good juice from the Cromford Report, which is our local real estate economist. And get all of their information so that we can use that to our advantage over the next month. So I've got 5 questions that have been coming up over the last couple of weeks, and so I want to address those first off. So one of them that I got, are things still selling? All I hear about are doom and gloom. All of the dang media outlets are saying the world is ending, basically, as far as the real estate market goes. And I just want to kind of allay those fears a little bit. Things are still selling. We've got 6 deals in escrow right now. And I will have you know, some of them are over list price. The majority of them are at list price. So things are still going. You really just don't, as a buyer, have to give away $100,000 over list price, waive all of your contingencies, and throw in your whole retirement plan for funsies. None of that are things that are going on anymore. So that's all really, really good information for you if you're in the market to buy. So if you're selling and need to do both, there's some wiggle room there. You can get a good deal. You don't have to compete, but you're also going to see fewer showings. So that's really it. Is a lot of the buyers that are in our market right now have a real motivation to be there, which is great. We love motivated clients. That means that they are ready and able to make a decision now, and they're ready and able to buy a house today. So those are kind of the people that we're looking for. So rates were kind of bouncing around that high 5, low, like right at 6%ish, and they've kind of come back down a little bit. And so we've seen some of our contract numbers and our showing numbers kind of come up a little bit. So some of that stuff is kind of nice to see, a little bit of that buyer activity coming back. So kind of fun. I've got some numbers here, but in Q2 of 2020, our affordability index actually dropped really low. We're not entirely sure that that affordability index is as low as it seems, because the census even says that their census info and their data was garbage during COVID. So I don't believe that Phoenix, the average person or household, only makes $88,000 a year. I'm guessing that that's higher, and so that's going to affect that affordability index. So it's at 22.3 right now, which is really not very good. But I'm questioning that one, especially as we see people kind of rebound into what's going on here. So we did have a drop in our owner occupancy numbers. So through COVID to now, we had a lot more investor activity and a lot more iBuyer activity than normal. And so we dropped from like a 70 to 76% of our market being owner occupied down to 62%. So some of that stuff is kind of indicative of the high prices, and investors are paying it. And now that the investors have pulled out a little bit, we're kind of back to our normal market, which is nice. So the investors and iBuyers actually, some of these numbers are going to floor you. Opendoor has 682 active properties, and 143 of those are under contract. That's under 10% of their inventory is under contract. You want to spell out opportunity? It's spelled Opendoor. The same with OfferPad, 381 active properties and only 45 are pending. So you guys, we've already seen it in the last week or so. They're cutting prices and fast to try to reduce some of that inventory. So our normal traditional market is kind of going along like normal, and Opendoor and OfferPad and these iBuyers are flash selling properties. Opportunity, right? We're always looking for opportunity. The other question that I've gotten a lot this week is, what should I expect having my house on the market? Well, it kind of depends on your zip code and your price range. We've seen and been studying some of our showing time graphs and reports, which is the program that allows us to schedule showings on some of our listings. And what we're seeing is really somewhere between 3 to 10 buyers are going through each house. So gone are the days of 3 to 10 buyers coming through in the first, 30 minutes. It's 3 to 10 buyers through in the first week. And it's going back to old school real estate, where our general rule of thumb is we want, with 10 buyer showings, we should have one offer. and that should happen in 2 weeks. So this is all kind of trending back. You have to really remember what real estate looked like in 2018 and 2019. So that's kind of the expectation. On the buy side, when you're writing offers, the caveat being some of these, open door offers or things like that, every once in a while we can find one where somebody's willing to do a deep discount from list price. You're kind of expecting to pay somewhat close to list price, and the total values really haven't dropped. So that's, you might get some extra concessions, you might get some rate buy downs from the sellers, things like that. But we're not in a market where you can come in and be like, you know what, I have all the power, I'm going to cut you $100,000 and just take it or leave it. You can totally play that game if you want to, but we're not going to see a whole lot of success with that game. Our economic report, I don't know if you guys saw this on our page. We just posted our economic report and some people were asking questions about it. There's a couple of really good articles that are in there. One of them by Tina Tambor, who runs the Cromford Report, who's incredible. And that's actually who I was listening to just a second ago. But she has some really good stuff there, as well as Elliot Pollock, who wrote our economic forecast for Phoenix. And he talks about some of the things that we've been posting about and talking about, for the last few months. How energy prices are up, food prices are up, interest rates. They talk about interest rate, rising mortgage rates, and how that's going to affect anything. They've said that we're probably going to be in a recession, 44% certainty in us being in a full-blown recession in the next year, and what that might mean. And then they also go on to say that Arizona is probably pretty well insulated from a lot of these things that might be happening on a national scale. And then some of Tina's really good stuff from the real estate update are some of the things that we've been talking about. It's been a really interesting 14-week period as the market has kind of shifted back down to normal. And a lot of our active listings, we were adding about 1,000 new listings per week. That's gone down to about 500. And then this last week, it was down to 400. So that's kind of normalizing, which we are so excited to see. It's right at a balanced market where those numbers rate us as balanced. And we've even seen an uptick as rates have kind of, stabilized a little bit and even come down just a nudge. Buyers are getting some of that certainty back and they're coming back into the market. And so we're seeing that in our contracts accepted. So that's all really, really good news for our long-term plan. And we want that confidence back in. We want to see that buyer activity. We want to see them feeling comfortable in taking that next step and getting a mortgage and putting an offer on a house. What was our other question? And you guys, if you have questions in here, jump in. I'm happy to answer anything on the fly. Goodness. Sorry. Get rid of that phone call for a second. One of the other questions that we've had is new home incentives. So a lot of the builders in a balanced market are kind of hesitant to add more houses and increase the supply at this particular moment. So they've been building like crazy over the last year and a half to try to meet that demand and dealing with their supply chain challenges and all of those things. And so they've come up with new strategies. They're increasing their spec home stuff. And at the moment, though, that's not paying them to do that. So they have all kinds of incentives. They're offering 2-1 rate buy downs direct from the builder, which means that they'll buy your rate down 2% in the first year, 1% in the second year, and then the third year your mortgage will normalize. So it ends up saving you somewhere around like $15,000 to $20,000 maybe, depending on what that rate is and what that price point is. So there's a lot of those incentives that are being bounced around. TriPoint is offering $15,000 off on your closing costs and crediting you that on some of their stuff. Blandford on their spec homes right here at Red Rock, right by me, they're giving $30,000 to $50,000 deep discounts off the spec home inventory that they have. So there's some big opportunities with a lot of these guys that hold big levels of inventory. If you're dealing with a normal seller, it's kind of traditional real estate. But when you're dealing with these guys that are carrying, 50 to 1,700 listings at any given time, their books are needing to get moved and their houses are needing to get moved off those books. So they're offering some really good things. So if you have questions on any of that stuff, let me know. Happy to share which builders, which plans, what I know. and kind of walk you through some of that, schedule some model home tours, schedule some of those appointments for you so you can make the best decision in your new build journey. Get a lot of questions about, should I buy now? Is this scary? Is it going to crash? Nope, not scary. Nope, not crashing. So some of the things that we were actually just talking about is the 2007. Let's take that back to right before we crashed, right? 2007. Supply count for Phoenix, active available homes on the market, hit 57,000 homes. We are today, or yesterday, I'll give you yesterday's number. We were at 18,597 active homes. That is a far cry from 57,000 active homes failing to sell. We have 18,000 that are selling in an average of 25 days on market. That is a very normal market for our world. In fact, we're still probably a touch low on our inventory levels, but since our buyer demand is a little bit hesitant at the moment because they've been bouncing rates back and forth kind of like this, that's a totally great number that we are okay with. In 2007, it took 145 days to sell a house. We're at 25. Again, far cry. So we don't see any kind of bubble on the horizon. This isn't a bubble bursting. We don't have any of that. So if you're looking at the overall economic report, I'll go back to that quick. Come on, guys. In asking, should I buy now? There are about 200 people that move to the Phoenix area every day. So that is incoming demand for housing, and they don't have anywhere to go, you guys. They do not have 200 homes that are being built and entering the market every single day. That's just not happening. We don't have 200 apartment homes that are going, oh, hey, I'm ready for you. I'll come here. It's not working like that. We have a drastic missing supply of homes in our market. And so prices will continue to go up. Granted, they're not going to go up at 30% anymore, which is totally fine. We are all very good with that. But they might go up 3% this year, 5%, something like that, which is heading back to normal. That's what we keep saying. Everything is kind of going back to normal. So as prices keep going up, even if it's just like a marginal number like that and what we're historically used to, it's still going to be more expensive next year than this year. So what you want to do is find the house, since there's a lot of options right now and you don't have the demand that you're competing with, find the house you love. You can always refinance if that rate comes back down. You can get the seller to contribute to buy down your rate to something that is really attractive for you. You have some of these flexible options right now. So yes, 100% buy now. Seriously. The only thing that I wouldn't do buy now is if you're looking to flip homes. That could be a little bit risky as there's a whole bunch of uncertainty in the very short term. So unless you get a smoking hot deal and it's an easy flip and you've got big cash gains that you are very, very confident in being able to attain, that's a different situation. But for an overall blanket statement, the flipping business right now is a little bit risky. And a lot of our flip investors are actually out of the market. They're kind of a wait and see what happens because that short term has been so volatile. They don't feel comfortable in being able to make that decision saying that I know I can get this in a month or 2 months or whatever. Then as far as the Cromford updates, I just wanted to kind of recap what we've been hearing from those guys is one of the big things that we just thought was really interesting is list prices are down 18.3%. So a lot of sellers are becoming way more realistic in their list prices, which is great because a lot of them were incredibly ridiculous over the last year. So those guys on their list price, not their sales price, those are two different things. List price, they're being a lot more realistic and those prices are coming down. Well, the list or the actual sales prices have only come down 4% from the absolute peak when everybody was giving everything away. So they're kind of normal. Guys, we're just all normalizing. List prices are down 18.3%. And then with rates kind of bouncing a little bit, they've kind of gone on a slightly lower trajectory if we're looking at the national average over the last 6 weeks or so. So the median home at $450,000 is actually a payment of $2,674, which means that you have to make as a household about $115,000 a year. This is where some of that affordability stuff comes in because our census is saying that our incomes never really grew, but we have all these high-paying jobs and these high-paying employees that are moving to Phoenix with these jobs and companies and corporations. So I don't know that I necessarily buy the $88,000 for the household income anymore. which is what we were talking about when we started. But the payments have come down 5.7% just since June. That's 2 months. So with that, the rates are really going to affect that affordability way more than whatever that price is. So that's where we're kind of watching some of that stuff. Our contracts are up 24% on new weekly accepted contracts, which is where I was saying that buyer demand is kind of starting to roll back a little bit. And what else did I think was interesting? I think that was kind of it. And then there's some other good news in that the stock market has had a decent week. And so if that's starting to kind of creep its way back up to where it might have been earlier this year, then that's all good news for our cash markets and our luxury markets. So we'll see today. I know it was at least my portfolio was down a little bit. So we'll see where that kind of normalizes for next week, and if that's a long-term trend or just a short-term kind of wiggle. So if you guys have, if you have more questions, feel free to shoot me an email. My email address is Chelsea, CHELSEA, at yourreddoorteamaz.com. Feel free to call me, 480-518-9907, and we'll do this again in another couple of weeks and answer whatever questions have come in. So as always, feel free to shoot me a message on Facebook, YouTube, Instagram, whatever, and we can kind of compile questions that way as well. So thanks, you guys. We'll talk to you soon.